We specialise in protecting, preserving and growing your wealth. Blacktower Financial Management, the team you want by your side. Visit blacktowerfm.com.
7th of March we're at, and it's a couple of weeks gone by since we last spoke to Christina Brady from Blacktower Financial Management. Should be on the line now. Good morning.
Good morning. Oh,
that's
good
right.
Morning. Can you hear me?
Yes, I can, yes. In the mornings, I guess you're sort of instantly having a look at, see where the markets are, what it's done overnight, that sort of thing. Or are you?
Sometimes, yes. Sometimes I wait till later in the day. It depends what time I've got, really. At the moment, unless there's some big news, I don't really have to worry. The FTSE is quite steady. I know it went to 8,000, but it came back down, and it's hovering about the 7.9 mark.
Yeah.
And the same with the exchange rate. It hasn't really changed that much. 112. 113, there's really not a lot of movement. So unless there's been a big, something has happened, or the US market or the Asian market has reacted overnight, I don't worry really, because it tends to follow what happens in the US. And in the Asian markets, US closes, Asia opens, then we open. So you can usually, if there's going to be some sort of big drop, unless there's a big announcement during the day or some government minister somewhere in the world, drops a boo-boo. Yeah. They're quite steady. So, yeah, not a lot in the markets, actually.
No, I'm looking across Europe at the moment and just flat, as you'd say, nothing really moving in either direction at the minute. We'll see what happens during the day.
It isn't. Even if you look at the CAC and the DAC, which sounds really bad, but the DAX is the German index and the CAC is the French, they're flat as well. Not much movement there. And I don't know what's happened on Bitcoin, though. I think that went down a little bit, didn't it? I think,
yes, it did.
Even that's quite flat.
Yes, it's kind of trundles along, and then I don't know. Just when I think I've got the hang of it, and this is the whole thing with markets, you try and time the markets, and guess what's going to happen? It's not as easy as in theory. Otherwise, we'd all be we're still living in a solid gold house somewhere, obviously. But yeah, that was down a touch. But I think there's more to come there. And as you say, with the exchange rate, what's the latest with interest rates? So last I saw was it may be not as big a rise as people were expecting. When are they meeting next? Do you know?
I'm not sure, but I know the Bank of England governor, he's warned that they will have to raise interest rates above 4%.
Right.
And also the Fed has signalled the intention to higher interest rates as well. Today, the Fed gives its annual monetary policy meeting to the Senate committee, so we'll see what's there. Wednesday, we have the Eurozone GDP figures, which will be interesting. But I think there is a consensus actually out there now that actually, which I've been saying all along, raising interest rates is not the way to cure inflation. What it's doing is it's killing the economy, it's choking consumer demand. And as I said before, you really need, rather than raising interest rates and raising taxes, when you have times like this, you should be cutting taxes so that people feel they have more money in their pocket and they go out and they buy more, stimulates the economy, leads it to grow. At the moment, you're stifling any growth because people are just not going out and buying items unless they need to. They say inflation is 10% or lower, but if you look at food inflation, I've been speaking to various people over the last few weeks, our food bills have gone up by 30% at least since all this started. Some people 40-50%. What they do when they do inflation figures is they add in things like white goods, electrical goods, where the prices haven't risen that much. So people are finding it very, very hard, and I think people are very afraid to rush out and spend their savings because they feel they may need them. You've still got high energy costs. If you have got a mortgage, interest rates have risen, so that's eating into your disposable income. And I did see one of the Tory ministers, she came out and said, well, what people need to do is get another job. Or get a promotion. But for the average person, if you're doing one job, jobs are not 9 to 5 anymore. They take up all your time. How are you meant to fit in a second job? You're just going to make yourself ill through stress and through this. And it's just really, really not on. And they're saying that at the moment, food poverty is huge. 1 in 7 people is skipping meals as the cost of living rises.
I was just looking at that story.
Parents are regularly skipping meals to feed their children. So I think we do need a rethink. I think ratcheting up interest rates is not good, especially as the banks are not passing that on to savers. So you've got the mortgage rates going up and you've got savers still, most of them are earning 2%. You can get some fixed rate deals now, but we'll wait to see. But they are predicting that we will see more rate rises, both in England and in the US and most probably in Europe.
Yeah, it does seem that the energy prices, the inflation as far as that's concerned, maybe have dropped a little bit, but it is food that's keeping it right up there. And that's obviously, it's an essential thing, daft and obvious as that sounds. And that's really causing issues. And I don't know, does the vegetable shortage because of, well, they say it's because of the Spanish weather, may have something to do with Brexit.
But we've got them in Spain. Everywhere across Europe has got them. It's the excuses they're coming up with. As I said before, I think countries have become too dependent. I think that's because of the EU policy. EU policy means that certain countries specialise in certain areas. They've become too dependent on other countries for basic necessities like fruit, vegetable, various foods. And I think countries, I'm not saying that some of the rules the EU have brought in place are bad. I said, but countries do need to be able to support themselves in times of hardship. And talking about in the UK with this cold weather, in the UK at the moment, Britain is firing up its coal-driven energy plants, so they have enough electricity for this cold snap. So as there's going to be blackouts, and if there starts to be blackouts, obviously people can't heat themselves. People could start to get ill, could die from hypothermia. So we've got various things at odds with each other. We've got the EU pressing for us to be all green, to become carbon neutral. If we become carbon neutral, we all die because we are, to get rid of carbon, they've got to kill us. So there's got to be a happy medium there. And, they're all saying they're trying to get nuclear power reclassified as green because they realise that there is no way just from solar, wind and other sustainable, what they call sustainable energy, that they are going to be able to keep the countries running. So that's something you've got to think about. And, in the UK with this weather, people do need to have electricity. They do need to keep warm.
Yeah, hopefully it's not going to be too drawn out. This I know there's this front in place at the moment, which is really keeping temperatures. But everything's going to be all right because Greggs are opening 150 new stores and Starbucks 100 new UK sites. It shows you the way it's going. Yeah, I don't know. But what then to make again, of that.
These stores, these places are opening more stores, but the wages they're paying, they're not highly paid jobs. So it's all, as I said before, it's all okay. MPs saying get a second job, but when you're at the lower end of the wage scale, it's very, very difficult to increase the amount of money coming in because, you are working very, very hard. But it is good that there is some expansion because obviously there's been a lot of jobs losses elsewhere, especially in the technology industry. We've got Meta, which I think is Facebook. They've said that they're going to lay off thousands more staff in the coming weeks, starting this week. Airbnb has cut its recruiting staff by 30%, and something called Alaticin, I can't remember that. It's a software company. They've cut 500 jobs. So in the technology side, in the hospitality side, they're cutting jobs. So obviously we need something to counter that. So it is good when you hear that other places are expanding.
Yeah.
Because obviously you've got some slack coming out.
Yeah, at least something is, I suppose. Yeah, Meta is it's obviously Facebook and Instagram, of course, they own as well.
Oh, is it? Is it Instagram?
Yeah, the two are linked.
I don't know.
I mean, it's their own fault for making. Well, this is not the employee's fault, obviously, but Facebook is just unusable these days, pretty much. Instagram's all right, but they're not the only tech company. It's just the way it's gone. They're the latest one.
Yeah, I know. Amazon's laying off. Google's laying off. They're all laying off. Instagram is a thing that the youth use, so it's quite popular. Facebook used to be popular. I think people don't really use it that much anymore.
Not for personal stuff. No, it's the business side.
You don't post much on there, so
no, because no one sees it.
But the technology industries are definitely laying off.
Yeah, and who knows what's going on at Twitter at the moment with Elon Musk.
Well, they all recruited so heavily during COVID, didn't they? Because they thought, this is golden times. This is going to carry on forever. When COVID goes, people are still going to carry on wanting to do everything remotely. They forgot that humans need interaction. I'd much rather go to a shop and buy something if I could than do it on the internet. I find it quicker going to a shop than trying to do it on the internet, to tell you the truth.
Yeah, and if it's clothing and stuff, you never know with size-wise. It can vary considerably. There's a lot of accounts online dedicated to that. So this is what I thought I was ordering, and this is what I got. And they look like some sort of a meringue or so. I don't know, but it is
frightening, actually.
Yeah. And this guy on Twitter here, well, he worked for Twitter, but it had to ask on the platform itself in a tweet, have I been fired, Mr. Musk? Because they don't know what's going on there. So I don't know how that's affected share prices and the like. But
if you saw some of the videos they were posting, the staff there, it was overstaffed. They were doing nothing. They had such a cushy life. Have you seen their offices? They had beds to relax on.
Oh, they had one of those places,
some of them were boasting all the time that they were getting paid these huge salaries for doing nothing. So you do need to streamline the business to make it profitable. Musk hasn't bought it as a money-lossing venture. He's bought it, he wants it to make money. That's why he's so rich. So people have to accept the fact that if you have got too many staff, if your income doesn't justify those number of staff, they've got to get rid of. And the trouble is, some of these have been so pampered, they don't understand, why they're losing their jobs, and they know they won't be able to find another job that gives them the same benefits for doing nothing. So what he's doing is he's keeping the good ones. He's looked through and he's seeing the ones that have actually justifying their existence, and the ones that have been just riding along on the crest of a wave doing nothing, he's getting rid of them. And I think that's really, really good. Any industry would get rid of the slack. I think some people are picking on Twitter because they don't like Musk, but it makes good business sense. And I think anyone that's had a business will understand what he's doing.
Yeah, you do that for so long, but get found out eventually when you just cruising and doing that thing where there is a word for it, where you look busy when the boss is around. There's a term for it. It's probably Germans will have a term for it. They have a term for everything. But anyway,
there must be a term for it.
Yeah,
I know. When I worked in the city, there were certain individuals who always tried to get in before the boss. And always left after the boss, and they weren't exactly busy, but they tried to look busy and they looked good in the eyes of the boss. Where some people worked really, really hard, in certain hours, and went home, and then they got told off. Oh, you're not here enough. You're not, and you're thinking, well, I'm doing twice as much work as the people who are sort of, showing themselves around. So. In the end, you do get found out. Yeah. And I think unless you're in the public sector, in the private sector, you have to make money. You've got shareholders, you've got business owners, no one's wants to be running a loss. And that's why that's happening. And I think that's why happening in the tech industry and all these online companies, fashion, whatever, because they overstaffed and now they're having to cut back, obviously, to make themselves profitable again.
I know you wanted to talk about different types of funds and investing because this is key to what you do. That's right. Yeah.
Yeah. Management styles for funds, because there's been a lot of discussion lately about whether you should have active or passive managed funds when you're investing, and I've had a few emails about it. So I thought I'd just tell people there are different funds, different ways of managing funds. You've got active and passive, and there is a sort of hybrid between the two called factor. So active, when they do active management, it usually they aim to outperform the indices. They're diversified, they're not predictable, they can be quite volatile, they involve frequent buying and selling. They have a higher cost than passive funds, and they're usually more risky. But if you want to make money, people tend to go more for active managed. Now, passive managed funds, they're usually low cost. They're diversified. They tend to follow an index. So what they do is they will try and replicate a specific index or a market. So say the FTSE 100, the S&P, the NASDAQ. But there are some very good ones out there. Vanguard is a prime example, a very, very low cost, does exceptionally well. And I think, people, there's always this debate over which is right, which is wrong. There is no right, there is no wrong. I think most portfolios should have a mixture of two. And there is another way they use it's called factor investing, and it's rules-based, and it combines active and passive investing. And it's highly adaptive. Again, it's diversified. It's sort of in between the two on cost. So there are different things that you know when you get a portfolio. If you have a financial advisor within your portfolio, you'll most heavily have a mixture of two. Most people go the active route with a few passive funds. Some people come to me and they say, look, we'd like to track the FTSE or we'd like to track the S&P. And as long as they understand how those indices work, we're more than happy to incorporate them into their portfolios. But I do know some people have heard quite negative things about passive fund management. It's not necessarily a bad thing. There are some very, very good passively managed funds out there. And you know, same goes for active funds. And, you know, it's something people need to be aware of, that there are different management styles.
And this is something you can point clients towards, and obviously, as you just said, tell them about it and incorporate it into their portfolio. So you can do this yourself, pretty much any of them.
Yes, we can. And that's why we're here. And also, if you've got a discretionary fund manager, they will be doing this as well. And if you've got instead of funds, some people invest in portfolios. And these portfolios take different funds from across the market and combine them into one to try and give you an optimal return. And they will have a mixture of both as well. And usually, if you look at the underlying information on the fund, it will tell you which ones are passive, which ones are active, and it will run through it for you. And it's, you know, it's something that people need to be aware of. It's not something that you need to make a decision on. Obviously, if you've got a discretionary fund manager or you're in a portfolio or you have a financial advisor, that's for them to do. But just so you're aware, if you go and see a financial advisor and they say, look, this is a passive fund, you know that's generally going to be low cost. It's going to track an indices or a market. And it's a tracker fund. And if they say they're actively managed, you know that they're liable to be a little more volatile. Both of them are diversified, and there is a difference in cost between the two. And while we're on investing, you know, if you're a balanced investor, it was seen that the ideal portfolio was 40-60, that's 60% equities and 40% bonds. And that's been a tradition for ages. And that's what a balanced investor would usually get in their portfolio. However, due to market conditions over the last 20 years, most agree that this needs to change. So there's someone called Bob Rice who works for Targent Capital, and he predicted that if you have a 60-40 fund, it's predicted to grow at a rate of about 2.2% in the future. And what they're saying is now you need to broaden the allocation, because this 60-40 fund, as I said, 60% in equities, 40% in bonds. That people are saying that you need to bring in other investments, so alternatives, you know, you need to mix it up a bit more. And I think most of the traditional funds are now doing that. So there are changes in the market. I think we are adapting to what's been happening in the last 20 years. When markets have changed, people's expectations have changed, and necessarily the 60-40, which is always seen as balanced, is not the way to go now, especially if you want to achieve more growth. But then then that's over the long term. Nothing's a quick fix. It's medium to long term. And obviously there is a slight increase in risk, but it's not unacceptable. And I think people need to be aware of that. So if you go and see your financial advisor and you want a balanced portfolio, they may say to you, look, we need to add in some other funds, and I would agree with that, just to give you that little bit extra upside if at all possible. And
it's one of those things, isn't it, that the stuff you sort of grow up learning, it doesn't necessarily apply now. Like we talk about, you know, keep your money in the bank, it'll earn you a nice little bit of interest, and you need to move on and keep up to date with things. And it sounds like that's the sort of thing that's going on there. These people have their F on the P, and when it comes to investing your money, they need to, of course.
They do, yes. And I think we've seen over the last, since I think last year was the worst year for a 60-40 portfolio since the 1940s because of everything that happened, you know, the economic repercussions of COVID, etc. And I think most of the portfolio managers, we do use quite a few portfolios. Some run, you know, like Brooks McDonald, Rathbones, Marlborough. And I was listening to a talk Rathbones gave the other day, and they're restructuring their portfolio to take into, because they do that all the time, but they're doing more of a restructuring. And and so are the others, because what you have to do with the changes in the markets, the conditions as they are at the moment, you've got to restructure more than you ever did before, and you've got to put in more stuff and look for alternative investments. And I think that's what companies are doing. We do a lot of work with the Pru, and that's one of our best sellers, and their portfolios are always moving, and they are incorporating alternatives, like they're looking for sustainable investments. They're actually buying certain projects that deal with renewable energy, etc., housing, to supplement what is usually traditionally held in a portfolio, to give you that extra oomph and to try and protect you against volatility in the markets. And I think at the moment that's key. We've got so much political unrest, and we've got, as you know, inflation, and we've got other factors as well, that's what needs to happen. You know, if you just look around Europe, at France today, there's loads of strikes where the unions are protesting against Macron's pension plans. We've got trains not working. We've got schools shut. Yeah. You know, we've got things happening in the UK, as we know. There's always strikes going on. We've got the US, where the current government is quite ineffectual, and we need a change of government, which will happen in the end of this year, 2024. You know, there's lots of things going on around the world, and it's difficult to hedge against political, instability. But most portfolios and funds now are understanding that they need to put in alternative investments, alternative to the traditionals, which are equities and bonds.
Yeah, as you say, it's a big day of action in France. It affects the airports as well, so anyone that's travelling...
Oh, has it? I didn't realise that. I knew trains, schools, various other things, but I didn't realise it was affecting the hospitals as well.
No, the airports, it's all in red.
Oh, airports.
Every airport within France, if you look at the map there. So you just have something to bear in mind. But
So would that affect flights coming to Europe? Is there is not, air traffic controllers?
Not air traffic controllers, as far as I can tell. No, okay. Just within the airports itself. But it seems an odd thing. I think, okay, I know the French don't like change, especially when it affects their. But going up to 64, the retirement age was 62 that they're moving it from. That seems like nothing these days. Way behind.
It doesn't, when you think that the UK and Spain are heading towards 70.
Yeah.
And and they're saying that if you look at the state pension age, it should be even higher, because what people have to realise is the state pension is really a glorified pyramid scheme. So at the moment, we've got less people paying into it than people want to take out. So there's not going to be enough money if this carries on. We haven't got the youth, the people paying in. So what they're saying is, when it came out, the average life expectancy was about 50.
Yeah.
And you didn't get your pension until you were older than that. And if you look at life expectancy now, it's 80, 82, 83. I feel they'd be mad to try and raise the state pension age to anything above 70, because it'd be very hard for people to work at that age. Your body and your mind just think, gosh, we want to relax. But you can understand where they're coming from. The states cannot keep on paying out when there's not enough money coming in.
No, and they're finding that everywhere.
It just can't happen. But when you've worked all your life and when you're sort of near retirement age and they suddenly raise the goalposts and you have to work for a few more years, or sometimes 5, 10 more years, it can be quite frustrating. But if you look in France and in the UK and other countries, certain sectors have lower retirement ages anyway. In the public sector, like if you're a policeman, if you're a fireman, etc., you can retire at an earlier age. But there is a lot of unrest in France, and I think if they, push retirement ages up any more across Europe, there'll be a lot more demonstrations in other countries as well. As I said, you get to a certain age when you just can't do those jobs anymore. Whether if it's a labouring job, obviously a lot sooner than if it's an office-bound job. But there are limits to people's abilities. And I think governments need to recognise that as well. Yeah,
as you said, there's still the sort of agricultural sector in France, and manual work, as it were. So that's definitely a thing. But I guess they must be in the same position where they're not having as many young people coming through.
That's
aging population. It must, because Spain is a particular example of that, where it's unsustainable. You can't see how it's going to be kept up.
It is, and it's across the world. It's happening in Italy. It's all European countries. And the problem with that is, governments. You may pay in all your life, and then governments may decide that state pensions are going to be means tested. So even if you've paid in, you may not get something. They're going to have to do something to balance the books, and it is very, very worrying, especially if you're in your 40s or early 50s. It's not. When will you get your state pension? It's if I will get a state pension, I think, is the main question they're asking now.
Yeah, I've done all my calculations, and when I get my pension, when I'm 67, I guess the age is at the moment, what a 24 hours that's going to be. I can probably take one day off before I have to start earning some money again. But that's the way things start.
Oh, yeah, and actually, talking about that, there was an article in the paper about the UK government because you could top up your state pensions. So people were being allowed to top up their state pensions, and the government was trying to tell people that it was going to stop these on April the 5th. But now they're trying to push that back to 2025. And I think if you are due a state pension and you're near retirement age, it's worth getting a forecast for your state pension and seeing how much it would be if you're not getting the full pension to top it up, and working out the economics. Is it worthwhile you topping it up so you get the full pension? And for most people that have come to see me, yes, it has made sense for them to top up their state pension because the amount they're going to get makes it worthwhile. So if you haven't already, you can go to the website. It's a gateway. I think you have to form this gateway account, and then you can get your forecast for the UK state pension. And it's interesting to find out, if you're going to be getting the full state pension, if you're only going to get in, 50 quid a year or something. At least then and at least you can factor that into your plans for when you retire or, for when you reach retirement age.
So you're talking about people that have moved away and haven't been paying in.
Anyone can do it. So whether you're based anywhere in Europe, as long as you've paid into the UK state pension, you can go on and you can get a forecast.
Yes.
And also you can find out if you can top it up and how much that will cost. And I think it is worthwhile for people to do that, because sometimes people forget how long they've worked and how much how much they've paid in, either if it's voluntary contributions or if you're working, those sort of things. I don't know, there's different classes, isn't there, class 3, etc. But it is worthwhile looking at it to see what you can do and to see if it's worthwhile topping it up.
Yes.
Because the basic state pension, I think, at the moment, it's about £142 per week. So that's around $7,400 a year.
I thought it was maybe not. If you get the full one, it's about 9,500. I think.
Yeah, it does go up depending on how many years you work. So at the moment, it's a 2-tier system, and it was replaced by the flat rate system. So it's currently worth £185 a week, around $9,600 a year.
Yeah, that'd be about right.
And you're meant to get a 10.1% rise in April, which for most people will be very, very welcome. I think, especially if you are relying on your state pension to help cover some of the cost of your heating bill and your food increases, it is a welcome relief. But even if you've not paid in the full 35 years, or if you contracted out for some reason, you still may be able to top it up. So it's worthwhile looking at it.
Definitely, yeah. We've mentioned that before, I think, that it's because it's relatively speaking, it's not a lot in national insurance contributions to pay weekly, monthly, whatever. But also on there, I noticed, because I have the Gateway account from paying to HMRC, regular sort of tax returns, and you can see where you've missed any years, but you can't make those up. You can't pay that if you've missed a year like there was too long ago. Yeah. You can't pay that off.
Yeah, it only goes back so far.
Yeah. It'll show you where the gaps are, but it may be worth considering.
I think it goes back to what's it called? An urgent 2-year extension to buy extra years going back to 2006. Yeah. So, you can still go back away. So I'm just saying to people, if you want to, I would go and do that, and it at least gives you some indication of what you're going to get or what you're not going to get.
Yeah, I mean, and maybe people have forgotten about it, but yes, you can do that. And then if you are due a Spanish pension as well, if you put in your, 15 years or so, you could get the two combined. It's not too bad. You can take.
So, as I say to people, you've worked hard. If you're due any money, try and get that money. Why not?
Let's just remind that Blacktower, of course, offices across the world. We're not just talking about along the east coast of Spain here.
No, we're not. We've got offices across Spain, across France, across Europe. We're in the Netherlands, Portugal, Switzerland, Sweden. We're in the UK, and we're in North America and South America and Australia. So, we are a global company, and Blacktower's been going nearly 40 years now. So it's not a start-up company. It's been here a long time. It's seen the good and the bad times, and we've always been here for our clients. And if you have got any questions or you want any advice at all to do with pensions or savings or investments, please just get in touch. The easiest way is to send an email to info@blacktowerfm, that stands for financialmanagement.com, put for the attention of Christina or BayRadio, and then they know how to pass it on. Or you can go to our website, which is blacktowerfm.com. If you click on contacts page, you can then go down and see my details, or you can just fill in one of the forms and send it off and we'll come back to you. Alternatively, you can call the office, which is 965058212. If we're in meetings, you may get a recorded message, but if you leave a message, we'll get back to you as soon as possible.
Thank you. It's just the usual reminder that there are opportunities out there. Everything sounds terrible if you listen to the news, but with the market volatility comes opportunities sometimes, so worth getting in touch.
It does, definitely.
All right. Well, thanks ever so much for your time as always.
Thank you very much.
Lucky to have you for this hour of your fortnight, and speak to you in a couple of weeks' time.
Listening and exceeding expectations for over 31 years. Blacktower Financial Management, the team you want by your side. Visit blacktowerfm.com.